Good morning, it's Harvey Jackson. Just going to get through some of the news items. One of them being a topic that's been talked about, I think, a couple of different times on video here, but China willing to reset the relationship. But I would put out there that it's got to be caution with the other trade partners. And what I'm saying is the EV tariffs that Canada has put on is actually in conjunction with the U.S. And I don't think our relationship with the U.S. is all that stable at the moment, just because on his knees, Carney has been flying all over the place in the world, trying to drum up some business and no deals with any of them. If he were to try to create that friction, even with the U.S., I think there would be a lot of blowback and. For sure. I know, everybody wants to do business with China being the largest agricultural buyer on the planet for a lot of oil seeds and you name it. But got to be careful with that. U.S. or the Saskatchewan came out with their harvest progress. They're 98% completed. You can see that there's a few crops out there that are still dragging a little wee bit, like your flax. And your chickpea is dragging your soybeans as well. But not in any great way. And then you're looking at basically the east versus west again for moisture, and looks like there's decent soil moisture, and you can see that even further into the government maps. It's still a bullseye in Alberta and northern Alberta in the Peace River region, but you can see Saskatchewan, Manitoba are basically soil moisture in good position. And you can see it on the total soil moisture as well. But it actually emphasizes a little bit more drought in south of Calgary and into Swift Current area as well. U.S. in talks with South America for soybean crushing. So in lieu of trying to create or encourage China to buy their beans, they are trying to get other countries so they're less reliant. And I can see that the U.S. is actually moving on this. I wish the Canadian politicians would start moving on this, on the crude oil and even on the soybean as well, or the canola as well. Get other business, not so dependent on just one big or a couple of big partners. Diversify your sales. So the U.S. is actually looking at that. Quick look at the weather. It looks like it's going to get warmer in the Canadian area. You can see, but cooler in some of those areas as well in the eastern U.S. Active weather. Manitoba is getting a little bit of rainfall, but you can see this sweeping over into Ontario. Here's just the extended, so we get another wave of moisture in it, but this is where the build is required to maybe move up those river levels. South America, again, planting pace is going on pretty quick. Even in Argentina, I saw they're in the 20s and 30s even, which is way ahead of pace. Just a quick look at what the markets are doing. As canola is down, rapeseed is down as well. But then you look at the soybeans and the wheat markets are all up, which is a good thing. And the Canadian dollar is slightly up as well. So you see that we've got a fairly tight range there. It looks like we're breaking out of the top end of that channel, basically trading sideways. But when you look at it in U.S. dollars, it's not quite as tight. And it seems that waves are not as deep either. So just because everything is bought in U.S. dollars, so it's just something to take note of. European rapeseed, basically sideways here. You can say you can had a couple ups and downs in that wave there, but you're basically trading sideways for quite some time. We're only trading $134 differential right now between European rapeseed and Canadian canola priced in Canadian dollars. Soybean oil, chopping sideways. This 200-day moving average is definitely support, but you can see that 50-day, 100-day is actually, it's getting caught in this wedge between those two moving averages. Soybean futures looks like it's trying to create a floor in here on the daily chart here. Crude palm oil, top end of that range, still doing quite well. The palm oil growers are definitely finding and utilizing more industrial oil, making biodiesel, jet fuel, you name it. I've talked about that quite a bit here. The crude, West Texas keeps on chopping down. It looks like it's going to try to get down to this May low that it made. Canadian dollar is following that same trend, trying to get down to that, maybe down to maybe the 71 cent area range. Just an ugly chart. Nothing nice to talk about when you talk about spring wheat, even though we've got a green candle way down here. There's some bids out there in the Manitoba area. Cargills were quoting 7.25 or for immediate delivery. So they obviously have a sale, even though you see this futures drop. Basis have improved, but don't expect the if there's a recovery here, that basis would be improving either. They'll probably take it all away, as demand would probably disappear as well. Your Kansas market is still, in that downward momentum. Same thing with Chicago, but you can see France milling wheat actually kind of chopping sideways here. Corn futures, there's basically inverse head and shoulders here. Now, is it going to break out? Like to think so, but we'll have to see if this kind of sets up properly here. Here's Darren.
I think when you look at December corn here, you're reaching a very important part here between this 420, 423, right along this May trend line. Why is this important? This is the Fibonacci retracement levels. Again, it closed above 423 today. We're setting our sights on the support resistance line near that 430 level. A breakout above a multi-month resistance line would be very encouraging, more so if you can get above the support resistance line, where we would initially target this move, this 431 move right here, but we're probably going to go back and challenge that 439, 440 level. So again, that is where we would want to have a secondary reward here. So again, if you haven't sold corn, looking for a spot to sell, it's initially at 428, 430. And then at 439 and 440. Those are just laying out some targets here as we move forward. Again, if you are looking for some reownership and you're doing it via options, I think maybe the better play here is sell put, sell calls. However, just the nearby momentum here is maybe starting to turn friendly here. The option side of things will only work if you get a substantial move. So if you're looking to get long here, you probably want to start doing that relatively soon for hopefully a breakout above that 430.
Here's another story that very likely going to impact the beef market. He's basically working on lowering the beef prices. Well, if you can lower the beef prices, you're going to have to lower it on the futures. So, and you can't say that just because he says something the market doesn't react. It definitely does. So expect this green leg that we've got both in the feeder cattle and live cattle to get a bang on its head here today, just because of the story that got put out after the market closed on both those complexes. And that's all I have for you today.